Welcome to Infrastructure Week, where we cover all things lending tech and transformation. I'm Dave Silverstein, founder and CEO of NED. We are honored to have our very first customer here at NED, actually, Ms. Thelma Johnson, the CEO of Albany Community Together, based in Georgia. We've been working with Thelma and her team for some time now as they've adopted cash flow underwriting workflows and have designed new financial products for their community. Welcome, Thelma. Thanks so much for joining us.
Thank you, Dave. Thank you for having me.
Of course. Well, I think, one of the things I'd love to just start with is just maybe share a little bit about ACT altogether. I remember talking to you a little more than a year ago, and I asked you how you came to really take on the leadership role at ACT, and you shared quite a bit about the mission and vision that you hold. Would love to hear a little bit more about that. Hear a little bit more about what you're focused on today at ACT altogether.
Well, I came to be the president CEO of ACT after it was started by 4 local banks in the city of Albany to provide assistance to Black-owned businesses and those businesses located within distressed communities that were affected by the flood of 1994 in Albany, Georgia. And that program ran for about a little bit over a year and a half before the city and the major banks decided that it was just too risky. The loans were not what they wanted to be on their portfolio. And they really didn't understand how to provide funding and access to capital to individuals and small businesses operating in distressed communities. They're different. They require technical assistance and access to capital that's affordable, and also access to new markets. And so we, at that time, they decided that was not something they wanted to partake in. And so we had to look at our mission, expanded beyond the city of Albany, to service every business that was operating in a distressed community and every business that was affected by the flood of 94. We then became an SBA micro lender, loaning at that time up to 35,000, and then we got to be 50. And so then comes 2008 recession. Our small business portfolio was struggling, and so we had to revamp that and look at something different. And then we became a CDFI. And we've been moving forward ever since, looking at the CDFI mission of serving undistressed communities and providing access to capital. And so with that, we have to make sure that the products we're offering meet our market. It's not like bringing in one size fit all, but the market really dictates to us what product that we need to have and how they need to be banked. And if we're going to be successful, we need to be listening to them. And
Understood.
That's how we got to be.
Understood. And Thelma, you mentioned CDFI. For those listeners or viewers that don't know what a CDFI is, can you share a little bit more about that distinction and what that means for you as an organization?
Oh, absolutely. The acronym is CDFI, meaning Community Development Financial Institution. We are certified by the Department of Treasury to provide access to capital, coaching, and connections in communities that traditionally have not had access, and to individuals and people who have not had access. Looking at the mission of CDFI, making access to capital affordable and available, we have to make sure that the product that we're doing is being provided to at least 60% of our target market. And our target market is African Americans and low-income individuals.
Understood. Would love to hear more about where you're operating. I think one of the things that has been really inspiring about working with the ACT team is that you do tether your activities and your day-to-day really to make sure it's a fit for the local economy, fit for the region at large. Would love to hear a little bit about Albany. I think you're also engaging across maybe 30 or more counties in Southwest Georgia. Tell us a little bit about the business owners you're engaging with. What types of sectors, are they operating in? What types of problems are they experiencing, or why are they coming to you for financing altogether? Mm-hmm. It would be awesome to hear a little bit about who you're really serving on the day-to-day.
Okay, we serve African Americans, of course, low-income individuals in our target market, and our industries have ranged from healthcare to mom and pop to contractors, beauty salons, barbers, and daycare centers. Mm. We're a sweet spot for that small business owner, not yet probably generating $1 million in sales annually. So we've been providing services to someone maybe not really able to strengthen their banking relationship because of credit or collateral. And then we're there to really provide them with that access to capital that they probably couldn't get from a traditional source, a bank. And we serve 38 counties in Southwest Georgia. And like I said before, we moved outside of Dougherty County in
Hmm.
Southwest Georgia. And we're in one of the poorest part of the state. In our local area, we have a poverty rate of 32%. Sometimes it's fluctuate between 32 to 30, and it's largely African Americans. And so when you get in an economy that has a poverty rate of 32%, you got to think about, who are my customers? And our customers are those individuals and those businesses operating within that ecosystem. And
Hmm.
so that helps us to understand, how do we make our product accessible and affordable, and making sure that it doesn't bring harm to the business, but rather it helps the business. And what role do we play with the financial institutions? If they have a bank, how can we strengthen that relationship? If they don't have a bank, how can we increase their ability to be able to interface with the traditional financial institution? So those are all the things that we have to consider when we're looking at our market. We look at our demographics, we look at our social economic demographics, when we're looking to do a loan, when we're looking to underwrite a loan, because many of our borrowers may come with not the perfect credit score,
Sure.
not having access to collateral, and maybe even sometimes their business development documents are not where they should be. And so we have to look at providing those business development services.
Understood. And I definitely want to come back to your points on the type of data that you're using to underwrite, what they're coming to act with in terms of readiness checklist of, bank statements, things of that sort. Before going in that direction, I do, want to pause, because when you and I first met, it was actually really really in the middle of the pandemic, really after that inflection point. And I do know that the pandemic in particular, hit your communities quite hard, and that much of your activities during the pandemic and certainly thereafter have been informed by that experience. I'd be curious if you can share, how that moment, during and after the pandemic shifted the way, ACT operates, and shifted the way the organization at large thought about financial products, whether or not you made certain changes to things, or whether it revealed new needs from the customers altogether.
That's certainly. When the pandemic hit, uh, that first week and immediately thereafter, Albany was number 4 based on population in the country, uh, for the number of COVID incidences and deaths. And we're a community that's, if you look at the county and the citywide, we're less than 100,000. So you can just think about that impact of being number 4 in the country based on population for COVID incidences and deaths. So, and that put a strain on our businesses that we're providing. As I mentioned before, we're servicing those mom and pop businesses. So
Yeah.
what happens to them when they can no longer go to work and they be shut down for 2 weeks and didn't have a backup plan, didn't have access to insurance, didn't have access to a safety net of funds in a bank that they can be out of work for 2 weeks and then jump back and continue to operate. So we had to look at that as we manage our portfolio. First, we had to offer them some relief in being able to repay their loan. And we did that. And after that, we began to look at those business owners that were operating, say, for instance, a beauty salon, who couldn't go back to work because the landlord said, I'm not going to open the business up. This was before we had any laws on the books to say that you're not going to be responsible for individuals getting COVID. And so even after the shutdown, she being not able to go back into your building because you don't own it, being controlled by the landlord. And we were seeing that happen over and over and over again. You had restaurants, you had beauty salons, you had any mom and pop that was not the owner of the commercial building having to wait until the landlord decides to make those corrective changes and open up the facilities. And then you had those that just could not meet payroll. And so
Mm.
what do you do? And if I want to do something different, I don't have access to my business and I don't have access to capital, and I can't qualify for the disaster assistance because I didn't keep the right paperwork. So now we're in a quadrant of trying to provide services to them that make sense. And so as we began to see more and more of that, we decided to look at the products that we had on the books. We had traditional principal and interest payments
Hmm.
based on the revenues that were coming into the business, based on 3 years of cash flow that you can document based on your documents, and like I said before, that had been a problem. We didn't have that. They were not able to produce business development documents. They were not able to produce their financial statements. And so we began to look at how we are banking them. How are we providing access to capital? Is it right for our market? And that was a moment where we had to say, okay, hey, look, we need to take a step back. We need to identify a product or develop a product that would better serve them. Because we knew for long periods of time we had issues with credit. We
Mm.
our underwriting even gave points for economic value because we knew that credit was an issue. We had a credit score that we would like to see, but if the credit score was not there, we looked at the credit behavior. And so then we knew there collateral was an issue. And so we were trying to mitigate collateral with credit. So if credit was positive, then we could disallow so much collateral. And sometimes that didn't even work. And so after COVID, it just uncovered a myriad of things that were keeping people from accessing capital and the way that they were being banked by traditional lenders and banks, being banked as a consumer and not a commercial business. And so we were able to look at that and then began to develop our product. And that was bring us today to what we have is the working capital flex.
Yeah.
Thanks to the NED platform and you, Dave, and
Well, thank you,
and
Thelma.
a chance introduction by Johnny from the
Yes. Yes. You never, I always say, like, you never know when dots will connect. I think, first of all, to hear your back, the background of how ACT, came to really reassess the product mix, because what you're describing is a product market fit issue. And that's kind of how we've always designed NED from a technology perspective. We've always saw friction in the market between small business lenders or commercial lenders and their borrowers, really trying to fit a square peg in a round hole. The small business loan that you're describing, where credit or collateral might be very difficult to underwrite, that's a financial product issue. That doesn't necessarily mean there aren't other options. And so, I do appreciate the acknowledgement there. And I'd love to maybe hear about the early days of working even with us, or before working with us, because what you're implying is that you've actually not just offered a new financial product, but you've actually fundamentally reconsidered the way you underwrite an individual that comes through your doors. Would love to hear a little bit about that experience and how you've implemented that innovation internally at the organization. Has it been, a learning experience? How has it been for, some of your team members at ACT? I can say we've been there along the way with you and have been alongside you in that effort. But managing innovation, for a small organization with potential mammoth, outcomes, is always a hard thing to do. And so, as an executive, would love to just kind of hear how you've taken on that challenge and where you started.
we've taken it on because we know it needs to be done. First of all, it hasn't been an easy task. It
Yeah.
has truly been a learning experience, and we love to tell people that it is a pilot program,
Yep.
and we are really looking at it and how and it gives us the benefit of being able to tweak some things that are not working good, to look at some things that we need to do better. And I can say that it has really helped us to understand our business owners because we've had it in the past where a lot of businesses were not able to bring us the documents that we needed to make an informed decision. And so with NED being able to model a cash flow from the actual deposits of the business. And the goal is for the business owners to provide us with their operating account. And so if it's attached to the NED platform and we're able to pull that data, then that gives us a cash flow statement that is almost true to what is actually happening in the business. In the past, we had to rely on documents that they gave, and whether or not we trusted the documents, and our decisions were made based on those documents that they provided. This way, we're actually getting a glimpse into the operations of the business by looking at cash flow based on deposits. And I can tell you that it has been working. We're struggling with one of our loans right now, and I think the borrower may not have thought that it seems all too easy. You're not pledging collateral. Credit was not an issue, but you were able to attach your operating account to the system, and we were able to tell you how much we would lend to you, and you met all of those criteria. And so then you say, okay, I can pull this, I can detach the statements, and then they don't know how much I made. Well, when it was reattached, we were able to access, because the bank account didn't change, of where you were supposed to be, what our payment was supposed to be at that time. So I think the technology is really helping us to understand how they're operating, and it helps them if they will actually go through the
Yeah.
program to receive the analysis, because that analysis will actually change the amount of payments that you're required to make on during your payment schedule. But it works if you really want to grow and scale your business and have a partner there to provide you with access to capital, because it's real world data. We're not really relying on a projected financial statement. We're analyzing your historical performance based on your own activity.
Absolutely. And I think, some of the learnings that you described, we've been there with you, and I think we've tried and we've done it. I mean, in many ways, the platform today, the Ned platform that we essentially, if you remember when we first met, we didn't even have, this is years ago, but we didn't even have a working first generation platform. If you remember, we took you through designs. And
Yeah.
I remember we clicked through designs and you're like, when can this be ready? And I do, I think that started a process between our two organizations where, early on, we certainly finished our platform with you and for ACT. And, you and your team have helped to really drive our product roadmap over time as we've learned, the way your team uses the platform, the way certain applicants that you're describing, for instance, in this case, come through the doors and are engaging in the qualification process. We're learning with you. And so, we're plowing all those insights into, new features, functions that we're deploying each and every day. And, to that end, one of the things that you've done along the way is you've actually created new qualification criteria. I'd love to hear about, in context of what you're describing, like the importance of using real-time cash flow data to underwrite. Tell us a little bit about the experience of rethinking who can qualify for a loan at ACT. What are some of the new criteria that you might have created, or some of the criteria previously that you've kind of set to the wayside, now that you're looking at cash flow in a new way?
Well, we want to look at least 2 years. And
Mm-hmm.
so we do have a loan that we would provide to a startup business, but not this particular loan, because we need the data to be able to analyze. And then now we're looking at, that even though we don't use credit as a qualifier, but that credit foundation needs to be there. We
Yeah.
need to understand your credit behavior. And so while you may not, the credit is not pulled to make a decision, since the decisions are all based on cash flow, but the credit is pulled to give us an understanding of what's your behavior. And that's a risk factor as well, to help us to determine, the likelihood of it being repaid, even though the business may be generating significant revenues, but your behavior may not be one that will lend to the repayment of the loan. If that
Understood.
makes sense. We've
Yeah.
learned that as well. And so with this new product, that is one of the requirement changes as well. Pulling that credit report along with the analysis to look at it so we can make informed decisions based on the data before us. And also the amount of the loan, maybe not expensing the 100% of the loan that you're qualified for upfront, meeting benchmarks and being constantly engaged with the borrower. And so that's another change that we're making. Almost operating it as a line of credit. Once
Yeah.
you show us that you need it, then we can advance that. You have an amount that you're qualified up to, and it's not deposited immediately. So that gives us an opportunity too to get to know you, to engage with you. Since this is technology and we're using technology as our platform, it's almost like you become my Facebook friend. I'm gonna accept you as a friend, but I want to get to know you. And
Yeah.
so I'm gonna give you a little bit, you give me a little bit, and then we move forward. And I think those are some of the changes that we've made, uh, and also requiring them to actually guarantee the loan personally. The loan is made into the business name, making sure that it is the business name, making sure that our intake form captures the right information, that it's a business loan, and then we have it guaranteed by the business owner. So those are some changes that we see that we're making to strengthen the process, to make sure that we can continue to offer access to capital in a creative and an innovative way.
Awesome. And what you're describing is iterative, an iterative approach to innovation. I think there's, what we've seen along the way is there's kind of two types of partners we've gotten to work with. There are folks that, have a need, there's an urgency to really try and get something off the ground. And I would, I would put ACT in that category where it's 80-20, right? You were willing to
Mm-hmm,
work with an
mm-hmm,
early stage
mm-hmm.
technology business, and you knew that the only way to really learn was to put it in front of your own customers. And what you're
Right.
describing is all of the learnings over the course of the first year. Um, as you talk to maybe peers in the small business lending ecosystem that are also looking at adopting new ways of working, right? Maybe they're the same size, or they're in different communities, or maybe even larger in terms of their loan books, but they're looking at trying to replicate what you did essentially, which is, how do you design a fully new financial product? How do you design a cash flow underwriting workflow to go with that product? And how do you get it off the ground? Like, how would you maybe provide them guidance to kind of bring that level of action to their organization? Because, it sounds like in our prior conversations, and even of our own experience, small business lenders are engaging and experiencing very similar challenges.
Mm-hmm.
They want to grow their loan books. They want to, provide best in class services and products to their borrowers. But there seems to be some sort of friction. There seems to be some sort of bottleneck. How can you maybe, provide, or what have you maybe provided as guidance to your peers? Because I know you have, and I want to fast forward to the Truist Foundation Award, because that in and of itself is, kind of just a fine point on what you're describing. But I'm curious to hear, how you explain your experience to those that are trying to do the same.
I always start with really listening to the market. What product is needed in your market, and what are some of the barriers to access to capital? And that is the way I would suggest for anyone to begin to design a product, is what is keeping the majority of those that come to you based on your application history from accessing the capital. And then using those barriers to really eliminate those barriers in the product design. And I think that is a good place to start. And mentioning Truist Inspire Awards, we are a finalist based on technology, how we are being innovative in offering the product. We are looking at additional changes, and I didn't say this, coupling our innovative product with technical assistance.
Mm-hmm.
And that technical assistance is going to provide an industry analysis for the business. And so to give that business an understanding of how they can scale, what the industry, what data is saying about the industry, where opportunities exist. And so we don't want them just to be able to repay our loan, but we want them to be able to scale and grow their revenues. So we're going to provide them with some data and access as well, trying to provide that very important, crucial TA that is needed for them to repay us back, and needed for them to analyze their business operations to take and scale their business and take them to the next level. And so to help any existing CDFI or peers in my industry is to begin listening to your borrowers and really looking at your portfolio. What types of industries are you serving? What's the average loan amount? What do they come to you for? What's the type of loan? Working capital, equipment purchases. What is the need? And what are the barriers? Why do you have to say no? Or why do you have to say not yet? or maybe, and then working to eradicate those barriers if they can be, looking at them to actually develop a product that address the barriers.
Certainly. And, with regard, I want to double click on the truest word because it really is a distinction that very few in the US get. Maybe give a little bit of background on what the award is, right? Because I think, when I learned that ACT was a finalist, I didn't really know much about it, but essentially in learning more, it really sets ACT apart, right? You are doing something new and novel and differentiated, and you're not just seeing the results as you mentioned, but you're also being identified as an innovator. And so maybe if you can, from a macro level, what is the Truist Foundation's award altogether? And, what was the process to go through that? And, where are you in the process now?
Okay, it is acknowledging those organizations that are using technology to provide innovative services to their market, really analyzing their markets and how can technology make them better or increase the better product for the market. Well, the awards were open to every organization within the Truist footprint. And so it began, we submitted our working capital flex and our very in-depth one-to-one TA that is paired with the working capital flex as the product, as our application. And so we were initially one of, I think it's 23 finalists, and then we 11, and then we became one of 7 finalists. And so that's over 6 months. We are going through very intense cohort trainings, and they're getting to know us and our product. And then we'll present in April of next year in Charlotte at Truist hometown location, and the winner will be selected. We could win up to 250,000. And then there's another award for fan favorite, audience favorite. So we can
Well,
get
I
additional
think I think I know who's going to get the votes for that, Thelma. All right, like that's a
Oh,
clear winner. That's and one of the things I just want to like focus on one thing, because the interesting aspect of your application in this award is that you've actually not just leveraged technology, but you've actually brought technical assistance beside the technology to provide value-added service. Technical assistance, can mean so many different things, but ultimately what you're saying is that, you can't just bring technology and capital to bear. You need to be able to relate to the borrower. You need to meet them on their own terms and provide them like the actual guidance, strategic mentoring and help that they need to put that capital to work. And so altogether, it feels like, ACT has brought distinct pieces of the puzzle together to make sure you're deepening relationships with the borrower. And one of the things that I've always been struck by ACT is the emphasis on relationships and trust. I'd love to hear about how you as an executive, as a C-suite executive, view like the value of deepening that relationship, investing in those relationships, and how you see that playing out over time. How you're going to bring different resources and innovative efforts to bear to make sure you're not just delivering on the capital and making sure that they're getting what they need from a financial perspective, but that they're building strong relationships that can really amplify their growth over time. Would love to hear about that. That's distinct. That's really unique.
well, we start with relationships first, because I believe that relationships move at the speed of trust. Once we we get trust in the door, then you have a relationship.
I might
And
steal that
for
from you, Thelma. Relationships move from the at the speed of trust. I love it.
I mean, you have to start with trust, because if you don't have trust, then you don't have a relationship.
Right.
So our borrowers have to trust what we're presenting, what we're saying, what we're doing for them, and in order to use our product, and to know that we have our best interests. And because many of the customers that I serve, they are either women or they look like me, so and then they haven't had prior experience traditionally with institutions that they may not have trust for whatever reason. And then when you have a name that says you're certified by the Department of Treasury, you're immediately in some efforts looked at as an institution.
Yeah.
So how do we get over that institutional label? We start with conversation. We start with hearing what they have to say, and then we bring back that in the form of what we've done with the working capital flex, and how we look at our products and how we look at our approach to servicing them. You know, when they come in for a loan, if they don't have the business development stuff, if they don't have they don't have the financial statements, we try to put them with someone that we work with very closely, our TA providers, to help them scale, to be able to provide the information they need to get an answer on the loan. And so that is building trust, because they begin to see, hey, they're not just there for the loan, they value the business and they want the business to be successful. And so we always try to lead with, if it's just a smile, even if it's a no, it's not no and that's it, but it's no and this is why. You know,
Yeah.
try to be very upfront and open with them to help them understand, you didn't get it today, and this is why you didn't get it. You know, the credit may not be there, the collateral is not there, and we never deny a person without being able to give them a valid reason of why not. You know, now.
Understood. Yeah. And so maybe as like a closing, we're now into 2024. It's a fresh year coming up. What are some of the larger things on the horizon for ACT? What's goals number one, two, and three for you, Thelma?
Goal number one is to stay in business and make sure loans
Yeah,
are being
always,
paid.
always, right. Yes, of course.
We are working with collaboration.
Yeah,
Is another goal, to do more of that, to help in our communities where we can. CDFIs don't just provide access to capital, but we're unique individuals, unique organizations that are addressing social determinants of health. If we can strengthen a small business owner, then they can purchase a house, have access to health care and finances, and create and grow wealth, sustainable wealth. We just don't want them to have income, but we want them to be wealthy. And so,
sure.
with that being said, we're partnering with a 50-plus-year-old organization that was birthed out of the civil rights movement to create a hub, a food hub. And that food hub would touch small Black and rural farmers, helping them to aggregate their produce, bringing it to market, increasing their revenues over a period of time, creating wealth. And in the front of the house, we're going to help eliminate barriers to food truck industry. In Georgia, you have to have a base in order to operate a food truck. That's a barrier to low
Yeah.
income communities. And so we're going to create commissary kitchens, shared kitchens, and a place for food trucks to be parked and restock. And then we're going to be there providing that access to capital. And we're also partnering with our local hospital system to actually do research, a health equity institute, because we were number 4 in the country with COVID incidences and deaths. How do we change that? It's everything is centered around food, and it's called the Table of Southwest Georgia, taking the name the table, because in civil rights we know that they had to meet around the table to come up with strategies. And so now we're around the table of Southwest Georgia to look at how we eat, how food is integrated, and really creating justices around food.
I guess my last question is, when do you get any rest, Thelma? Yeah, you are everywhere. You are certainly core to the fabric of your community. I am so grateful that we get to work with you and learn from you and your team. But if there's anything else that you'd like to add, before we close out for the day.
No, but that's one of our projects. We do have another one with another
Oh, go for it! Oh,
nonprofit.
no. I was like, I was so taken. I was so you had me. I was like, is she bringing it? Go for it. I'm so
we
sorry.
we're part of this project that is goal is to revitalize what we call in our community Harlem. We had a Harlem Business District, and the Harlem Business District was so important to the civil rights movement in this country. It was the March on Albany, where Reverend Dr. Martin Luther King thought he failed. And it bothered him so bad that he wrote from the jail, said, I'm kind of moved about what happened in Albany. And he studied it. It was the sheriff, was using his tactics. He was not, he didn't use the hoses and the dogs. So the March on Albany led to what we came to know as the March on Selma and the March in DC. So Albany was pivotal for that turn in the civil rights movement that caused changes in our community. With that said, we're partnering with Mount Zion Community Reinvestment Corporation and the Harlem Renaissance Corporation to revitalize Harlem, and it's going to be centered around a food hub where you have restaurants, because that's what we talk. We always gathered around food in our community, and so we knowing that COVID was, again, pulling from COVID. The church that is actually a part of the Community Reinvestment Corporation has a clinic that provides services to underinsured or no insured individuals, and they're going to build the capacity of that organization to be able to offer services to people that are insured and underinsured, and making sure that the small business owners that are in that ecosystem has access to health care for them, their families, and their employees. And then another component is housing. Mm-hmm. And it's right next to the new transportation center that has been built by the city of Albany. So you're touching transportation, housing, and healthcare, and creating an ecosystem that's going to be all self-contained, providing access to all of those things for small business owners and families in Albany.
Amazing, Thelma. It really is. I feel like even, rewinding the tape a year and a half, 2 years ago when we met, so much has happened. And so much has happened in your community and the communities that you operate in. And in one way or another, your organization is in the middle of it. You're at the intersection of so much of this effort to do what you're saying, which is revitalize the community, whether it's through structured capital, investment in small businesses, whether it's through special projects and collaborations. Always leaving inspired from our conversations. So thank you. Truly, thank you for being our partner. Thank you for helping to, really build something that I hope is helping you and others. But otherwise, so appreciate you being on Capital Compass today. Thanks so much, Thelma.
And thank you.